Hello, this is Ahra again with another market update to see what happened yesterday, what is going on in the market today, and what we have to wait for the Wednesday, October 13 in the market. Uh, yes, today is the most busiest day of the week. Besides that, the earnings will start, earnings reports with JP Morgan and Delta Airlines. We have to also focus on economic data. We had already Chinese trade balance that's published a few hours ago in China. It was much better than expectations, so it's supposed to help the Chinese market, but at the same time, it didn't. But you know what I'm saying, at the same time it didn't, because our Asian markets were much lower, much less than the Chinese market. Hong Kong was closed because of I think because of the storm. The Hong Kong was closed today. It was like suddenly closed. It was not like earning. It's not like planned holiday. The Japanese Nikkei also fell earlier today, but the Shanghai lost less because of this positive economic data, the positive trade balance from the China. Later today, we will have the GDP numbers and manufacturing data from Britain, United Kingdom. Then Germany supposed to release its sorry, I'm not feeling that good today. Supposed to release its inflation number, and later after that we will have finally the CPI numbers, inflation numbers from the United States, and Federal Reserve meeting minutes of the last month, in September meeting. Yesterday, in Eurozone, we had the October economic data from Germany, which shows that the market sentiment, the economic sentiment in Germany was a little bit less than expectation at 21. We had the same weakness in Eurozone economic sentiment as well, and also. Later in the US season, we had the job opening data. The US job opening data still for the third month in a row is above 10 millions. However, it was the first after 3 months raising. It was the first month that it was decreased from the month earlier. Like yesterday's data showed almost 10 point, yeah, let me see, 10 millions and 439,000 opened jobs that still are open and not filled by the last day of August, compared with the month earlier, which was more than 11 millions, almost 11 millions 100,000 in the July. This job opening numbers, it means the jobs, vacations, vacancies that were in the ready positions that still are unfilled in the economy in the United States. For example, if it's for US, it's in the United States that are still free or unfilled in the last day of month. So if we have for the August, so it means that in August, in the last day of the August, we had 10.439 million vacancies opened, and the people, they didn't take the advantage of that. So this is the yesterday data. Besides the economic data, do not forget that yesterday we had some Federal Reserve speakers as well. Yesterday we had Vice Chairman Clarendon, we had Atlanta Federal Reserve President Bostic, we had St. Louis Federal Reserve President Mr. Bullard. That they spoke yesterday. They had their speech yesterday, and all of them, they agreed that economic condition is economic recovery, and the condition it meets the Federal Reserve expectations. So we have to start tapering somewhere in 2021, and even as I mentioned earlier, that if we have this economic data, we will have to start the rate hikes in the first half of the 2022. This is what yesterday we saw finally, we heard finally that they are also, the Fed speakers also, they confirmed that if we continue this kind of the data that we have at the moment, it means that we have to start the the rate hikes in the first half of 2022, and not just to start the tapering, we have to end the bond purchases program by the end of the first quarter, or maximum in the first of next year. This is what was the most important data that we had yesterday. For today, economic calendar, if we want to trade for today, economic calendar is so busy. But just be careful about what happened yesterday. Be careful about what is going on today in the market. As I told earlier, we had the Chinese trade balance, which was much better than expectation and increase. It's supposed to help the energy market as well. And then later we will have the interesting numbers from the UK. Yesterday, let me tell you about the employment numbers of the UK that we had yesterday. UK's employment number, as I mentioned in the last days, it is so closely following the same way, fate and same way in the UK. In the UK is following the same way in the US. UK employment number yesterday showed that the unemployment rate is steady at 4.5, while average earnings income in August, I think, right? In August, it was like 7.2% increase. Let me check the numbers. I'm just trying to check the numbers to don't be confused and don't make any mistake. But it was increasing so incredibly, like more than 7.2%, more than 7.2% increasing in average earnings. And these numbers are the same with what happened in the US. That we had the less than expected created job. Same thing we had in the UK, less than expected created job. But at the same time, unemployment rate was less at 4.5%, and average earnings plus with the bonuses. Average earning with the bonuses increased 7.2% in August. It's incredibly amazing. And it's in the last days we had some Monetary Policy Committee members, MPC, we call it MPC in UK. MPC members, they emphasized, they had a comment that we have to start rate hikes faster and much earlier than any other expectation, because the economy is growing so fast, and at the same time the inflation is killing the economy if it continue the same way, especially with the current energy prices. This is what happened yesterday in the market and in the UK numbers. Today, that's why today we have to focus on today's UK economic numbers, because the UK, if the GDP numbers also confirm that the economy is fine, then we have to wait for really faster rate hikes in the UK, and it's supposed to help and support the British pound. This is that's why with this idea in mind, and thinking that today we have the inflation numbers from the US, inflation numbers from the US and Europe, from the Germany, and with the industrial and manufacturing products from other countries. That's why you can see here in the chart that this is, as you can see, the VIX chart. VIX chart is still at its high levels, above 19, and it says that the economic situation is risky and we have to take care about our trades. Yesterday, as you can see in the chart, S&P 500 again closed a little bit lower than open position. This is the open trade. This is the futures chart, S&P 500 futures, and the futures trading right now today also is trading flat, almost a little bit higher than open price, but still it's a flat, and in a general trend is a down trend. The same thing we can see in a Nasdaq, same thing we can see in a Dow Jones. Dow Jones heated and increased. That Dow Jones movements was a little bit more than other stocks, other indices, and even the decrease was more because of, as I told, the higher yields, higher bond yields is putting tech stocks under pressure, and at the same time we have still incredibly increase in energy stocks. So that's why the Dow Jones movement is a little bit harsh than others. Let's go to the Brent oil and the crude oil. See that the crude oil, as I mentioned yesterday morning, that after several days of increasing, we have some signal of the weakness. Yesterday, the oil and there is a kind of relation. I published an article last night in a website. I hope you saw that in a website and you could read it. You see, there is an incredible incredible relation between the oil and the stock markets. Stock markets, one of the reasons that stock markets are under pressure in the last days is because of the higher oil prices. Higher oil prices, what does it mean for the market? It means that we will have the higher inflation, and as long as the inflation is high, we can see the central banks will start their hawkish policies, or at least they will ease their dovish policies. So it means that the stock markets will be less supported, will have the less support. So higher oil price means less stock markets, like cheaper stock markets at the moment. We're talking about the current situation, and it's interesting. Less stock markets. It means that if we have this, if we see that the weaker than expected stock markets, it means that the production will be less, the services will be less. So we're gonna have the less demand for the oil. It means that again, the less demands for the oil means that the lower prices for the oil. So that's why you could see that these different factors against each other, they created finally the steady market in the oil above $80. So this is what we are expecting to see in the next days, and with the literally a little bit better stock markets, the oil price will stay. However, the oil price is supposed to stay higher, and it doesn't mean that we will have the less than these levels. But the oil price will stay still is in, as you can see in a bigger chart, still it's in a high uptrend and it's still increasing. However, what does it mean? It means that if we see the correction in oil price, it's not going to be the crash, is going to be the correction about these levels. But next days, if the stock markets recover, then we can see again the oil price and other oil price in higher levels. So in the cryptocurrencies market, you could see that the cryptocurrencies within the cryptocurrencies, we could see the ease in the last 2 days. Still, the market is heavy in the cryptocurrencies. As I mentioned in the yesterday market review, we have many reasons to see that the cryptos are a little bit still under pressure, as we can see in the chart. From the technical point of view, as we can see, the RSI is less than 50 level and still or at the 50, and OBB trend line is decreasing. So it means that at least in a short term, we will have the correction in a Bitcoin chart, but in the Ripple, it's a little bit different. The situation, Ripple is still in a high trend, is uptrend, and the same thing with the Ethereum and Ripple, they are still in an uptrend, but the Bitcoin have a little bit different situation. Probably we will see some more correction in the Bitcoin chart. This is the overall market condition and what happened in the market in yesterday. And what's waiting for today? Let me see if there is anything that I forgot to tell. Totally, what I can say that in overall that the market condition is fine, economic condition is fine, and with these economic conditions, we can wait for more hawkish policies from different central banks, while we have really growing inflation worries. This growing inflation worries is something that's just like creating a more disappointing more than earlier from the higher level for the stock market. So the market participants, maybe they can sell and take just like book their profits and stay out of the market, especially with the starting of tapering. I'm searching to see is there anything else that I have to mention. The oil price I talked about, the Fed I talked about. The Federal Reserve, as I told the Federal Reserve, I think I talked about that. The Fed is under pressure really, especially if the 2 days, the 2 days inflation numbers will be very important. If the 2 days inflation numbers also it sprints and it comes more than expected, more than market expectations, it means that it says that that inflation numbers, this inflation is increasing in the US. It will go faster than earlier. If it becomes more than 4%, it will go faster to the hawkish policy side. This is the total and overall market condition, and hope it was useful for you. See you guys next days, and don't forget please to subscribe, comment, and like the videos to see the earlier to be the first person to see our videos. We're gonna have the daily video every day to explain what is going on in the market and how you can take advantage of it. Thank you so much and have a good trade. Bye.